We just finished focusing on pretty much all the things that affect inventory on the purchasing side. Okay, and so I want to give you a little illustration so you could kind of remember how things are going, right? And so when we talk about our inventory account, we know inventory is a what? Asset when it's purchased, but when we sell it, it creates an expense called cost of goods sold. So we're talking about the purchasing side, and we're talking about inventory. What things could actually happen? What transactions could actually happen that will cause inventory to increase? Obviously, a purchase will increase inventory. That's why I'm debiting it. Okay. For right now, I'm going to write the word freight in, and I will explain this in a little bit. But freight in increases the cost of inventory. Freight in. What decreases inventory? Sales decrease inventory. Discounts on the purchase side, right? We saw that. Purchase discounts decrease inventory. Purchase returns, we saw decrease inventory. Purchase allowances, we also saw decrease inventory. So we have purchases increase inventory, freight in increase inventory, sales decrease inventory, purchase discounts, purchase returns, and purchase allowances. If you could understand what just happened, this would kind of summarize when should you debit or credit what? Inventory. Any one of these events will cause you to credit inventory. Any one of these events will cause you to debit inventory. So that's a way to kind of summarize everything that we've done on the purchasing side. Okay? So now we're going to talk a little bit before we go into sales about transportation costs. Transportation costs. Okay? Now the first thing I want to talk about is FOB shipping point versus FOB destination. FOB shipping point versus FOB destination versus. My handwriting is horrible. Bear with me, guys. Versus FOB destination. Okay? Free on board shipping point versus free on board destination. So, I'll quickly explain to you what's the difference between the two. These contracts basically dictate when does the buyer actually own the goods. When does the buyer actually own the goods? Therefore, when should the buyer actually record the goods on their books? That's what this dictates. This tells whether or not, at what point of the shipping particular situation, when does the buyer actually own the goods, thus being responsible for the goods and making a proper journal entries to increase inventory. Right? So, free on board shipping point means that the buyer will receive ownership of the goods. The goods becomes the buyer's goods when it reaches the what? Shipping point. What's the shipping point? The shipping point is the actual carrier that's going to send the goods. Okay? So, for example, who's the shipping point or what's the shipping point? The shipping point could be UPS. The shipping point could be Federal Express. The shipping point could be Greyhound. It could be anybody who's making the actual shipment of the package. So the minute that it gets to that particular spot, the buyer now owns the goods. The buyer should record those goods on his inventory. So while the goods is in transit, while the goods are moving, who actually owns the goods are being shipped? The buyer. Because the minute it reaches the shipping point, before it gets shipped, it's already the buyer's goods. In contrast, we have free aboard destination, which means that the buyer receives the goods when? When it actually reaches the destination, the shipping address. That is when the buyer is going to receive the goods once it gets to their house or their business address. So while the goods are being shipped, the goods are still belonging to the who? Seller. The buyer owns the goods. Now, I've explained that as clear as possible, and it may take a couple of reviews of this video to make sure you understand. So please, watch it several times until it sticks up here, okay? Free aboard shipping versus free aboard destination, okay? The next thing I want to talk about is the difference between freight in versus freight out. Freight in you should already be familiar with because I just lectured about freight in. I didn't explain what it was yet, but I just lectured about freight in and I told you that it affects inventory. Freight in always affects inventory. It increases inventory. So by nature, what is freight in? Freight in is any shipping cost that you pay to get the goods to you. If you pay to get goods to you, any shipping costs you pay to get the goods sent to you, that's considered freight in. And freight in is included in inventory. Freight in is included in inventory all the time. Freight out is obviously by definition the shipping cost that you pay for to do what? Send the goods. To send the goods out. To sell the goods to somebody. You say, I'm selling some goods to you. I pay for the shipping cost to get to you. That's considered what? Freight out. Freight out is not included in inventory. Freight out is an expense. It's an expense. Okay? So you would, if you have freight out charges, you would debit. If you have freight out charges, you would debit freight out expense, delivery expense, credit cash. If you have freight in charges, you would debit what? Inventory and credit cash. The last thing I want to tell you is that sometimes you have freight in when you're making a purchase on an account. Freight in does never receive a discount. No freight in charges never receive a discount. So if you pay within that discount term, you must deduct the freight in from that amount because you're not getting a discount for freight in.